Hey there, welcome to Kneppy Invest. This part of the video I've actually recorded on Tuesday, the 28th of February. The rest of the video I recorded on the weekend, which would have been the 25th and 26th of February, just after Clinuvel did release their half-year results, which was on the Thursday or Friday. I think it was on the Friday. And I didn't actually think that Clinuvel share price will drop 14% on the Monday, the 27th of February, has dropped another 3 or 4%, depending on what time I'm talking about this morning. So I'm recording this video at 10:40 a.m. Sydney time. So market has been open 40 minutes. We did see a little bit of selling on open, which is understandable because retail investors will panic typically when they see the share price of a company they own 14% in one day on no news, because they believe, not all of them, but a lot of retail investors do believe, if the share price falls like that, then insiders know something, and that's why they're selling. So no news from the company. In fact, I went online just to see if there was any news in regards to EPP treatment, because there are some competitors out there who are or want to develop alternatives to senes, which is Clinuvel's drug or treatment. But there was no news out there at all. So who knows why the share price dropped 14%? Maybe it was just a delayed reaction from the results. Maybe some fund manager out there didn't or saw something they didn't like in the results, and they decided over the weekend they needed to sell out no matter what. Who knows? At this point in time, it's all speculation. Hi there, welcome to Kneppy Invest. I've not done an update video for Clinuvel for about 8 or 9 months. I think it was July 2022. And then I did get a request from a viewer in regards to doing or possibly doing an updated video for Clinuvel. And I thought, why not? I'm a fan of this company. I am a shareholder of this company. And even though I am a bull on the future of Clinuvel, there is also some risk. And I'll talk about those risks during the video, because I don't want to be too biased or come across as being too biased, because I think it's very important when you are a shareholder of a company to keep an eye on all those risks, because if you just focus on all the bull case scenarios, you might lose sight of the investment. And then when something bad might happen to the company, you're not willing to sell because you've fallen in love with the company. So even though I do like Clinuvel, I'm fairly bullish about the future of this company, I'm not in love with this company. And I'm always willing to take a look, step back, take a look at the risks, acknowledge those risks, and always keep an eye on to see if those risks are creeping up on Clinuvel and Clinuvel are not being aware of those approaching risks. So hopefully that makes sense. So let's get stuck into, I'll try to keep this particular video brief, because I'm only doing an update on Clinuvel and really focusing on the half-year results. Before we have a look at the half-year results for Clinuvel, just want to talk or touch upon one of the major risks in regards to this company. And that risk is around the very fact that this company is a one-product company. They have a product called senes, which is a treatment for a condition called EPP. I won't try to name the actual name of this condition, but it is EPP, or shortened to EPP. But really, it's a treatment for people who are oversensitive to light. If they go out into sunlight, maybe even normal light, their skin will turn to blisters, that sort of thing. And this senes is an implant that is put under the skin, and it solves a problem for these people for a certain amount of time, a short amount of time. Now, because it is an implant and does not work for an infinite amount of time, they have to have this implant put in a couple times a year. And the most popular time for this implant to be put into the body is just before summer. So there is a bit of seasonality to the revenue for this company. And typically the worst two quarters are the current quarter we're in right now and the December quarter. By far the best quarters are the June quarter and the September quarter. You'll be able to see that when we look at the revenue history for this company. And I've broken down the revenue history into halves, and you'll definitely see there is a bit of seasonality when it comes to this business. Now, again, the biggest problem I have with this company is they are one product company, which means if anything goes wrong with SNES, this company will not have any revenue coming in the door. When I say something wrong, I mean a competitor comes onto the scene and has a solution to EPP that blows SNES out of the water. But Clinuvel is developing other drugs or treatments for other disorders or stuff like that, including CNS disorders, strokes, a thing called penumbra. They're also talking about treatments for acute neurological, endocrinological, degenerative disorders, also repigmentation. I think that's called vitiligo, if I remember correctly. So they do have a lot of stuff in the pipeline. So hopefully, eventually, Clinuvel becomes more than a one-product company. And that's, if they do head down that path, they do de-risk the overall company. So because this is a one-product company, I do expect a little bit of a discount to their valuation. And you might be surprised to know that the P ratio of this company is about 45 right now. And the reason why, even though there is a bit of discount to this company's share price and valuation, and you might be saying, well, P ratio 45 doesn't sound like a discount. The revenue growth for this company over the past few years has been absolutely phenomenal. And if this company was more than a one product company, the current P ratio of this company should be like 100, 120, just based off the revenue growth this company has seen in the past few years. Not only that, the profit growth in the past year, based off the half yearly, is almost 100%. And even though it's on a sort of low base, $5 million, you can just see the amount of growth this company has experienced and why, if you look at the valuation metrics, it does seem quite expensive. Now to the half-year results, and a fairly interesting reaction from the market when Clinuvel did release these results. We'll talk about that towards the end of the video. Revenue up 19.2%, up to 29 million. So not a lot of revenue, but this company has great margins. And if you look at the expenses only grew 1.1% compared to the previous corresponding period. So if you have revenues growing at 19%, but expenses only growing at 1.1%, you have reached significant scale. Now, one problem with that expense growth is they did take into account changes in inventories, and that changes in inventories led to that expense number actually being about $2.6 million lower than it could have been. So even though it does look like expenses didn't grow, expenses did grow. They'd increase their marketing, increase their staff costs, that sort of thing. But overall, because expenses didn't grow in this particular half year, all that increase in revenue fell to the bottom line, fell to the profit. And that's why profit grew 94% in the past, well, compared to the previous corresponding period, the first half of financial year 22. Earnings per share grew at 93.3%. Cash grew from something like $120 million to $140 million as well. So this company has a lot of cash on hand right now. And I'm really interested as a shareholder to see what management do with that cash on hand. And I love to see business with a lot of cash on hand because it gives the company's management a lot of flexibility. They could do a lot of stuff, including acquisitions, increase their spending on research and development to bring other treatments to market, that sort of thing. So I'm more interested to see what the company does with that cash than anything else right now in regards to Clinuvel. Now to the revenue history for Clinuvel, and I've broken this down into half-year increments just to show you the seasonality when it comes to revenue or cash receipts for Clinuvel. I've also included gross margins. Now, gross margins for Clinuvel, according to, I think this was from Ticker, was around about 98% between 2016 and 2019. That's really high gross margins. For instance, Pro Medicus has some of the best gross margins in the world. They have gross margins of 99.9%, almost zero cost of sales. And Clinuvel was heading down that path where it was sort of becoming like a mini Pro Medicus, but gross margins have fallen a little bit over the past few years, but still around about 90%, which is really good gross margins. One of the reasons why I like high gross margins, particularly like Pro Medicus with 99.9, it means if you don't have any cost of sales or very small cost of sales, you aren't going to be affected or less likely to be affected by inflation unless they see wages starting to increase. That's the only way you might see inflation affecting these sort of companies with really high gross margins. And in fact, if you see gross margins increasing for a company, that particularly during high inflation periods, That means a company has pricing power, and that's the sort of company you want to have in your portfolio. But back to revenue here. So I've broken this down into half-year increments just so you can see the seasonality. So if you go back to financial year 22, in the first half of that year, Clinuvel had revenue of 24.6 million. And in the second half, they had 41.5 million. And every single year, it seems like the market is sort of fooled by the decrease in revenue from the second half of the previous year to the first half of the new financial year. For instance, revenue dropped from 41.5 million, the second half of financial year 22, to 29.4 million in this particular first half of financial year 23. But this is a regular occurrence, and it always happens for Clinuvel because they get more revenue in the Northern Hemisphere summer and less revenue in the Northern Hemisphere winter, because most of their clients, most of their customers, most of the people who want to use SCENESS are in the Northern Hemisphere, and they want to use SCENESS treatment in or just before the summer period. Now let's have a look at some metrics for Clinuvel, and there's a lot of things I look at, and I just don't look at one thing. I look at all these things combined. For instance, I do know some investors look at return on equity, and depending how high or low return on equity, they form a judgment around a company. But there are some flaws around return on equity. A great flaw can be seen in Johns Lyng Group. Now, they made a significant acquisition about a year ago, and they increased their goodwill or their intangible assets by something like 280 million. And that meant the return on equity for John Lyng's group fell from about 30% to about 10%. And I did hear someone mention, this was an expert, mention, well, John Lyng Group return on equity is low. It's lower than we like at 10, so we don't think this is an investable company. So you have to dig a little bit deeper than just looking at these numbers. If you see a return on equity of say 50 or say 5, just don't look at that number and think, well, this company is high quality or low quality. You've got to look at the whole picture. Now back to Clinuvel. Nothing too askew here when we look at all these financial metrics. Market cap of 1.16 billion. Now, this company has $140 million of cash, which means the enterprise value, which is a true picture of the current valuation of this company, is just over $1 billion. Profit in the trailing 12 months, so we're not looking at the last year, we're looking at the last half of financial year 22 and the first half of financial year 23 combined, which is the trailing 12 months, 26.4 million. Operating cash flow, 43.6 million, and both of those are climbing really nicely over the past few years. Now, one thing I always look at, and that is the compound annual growth rate in revenue per share. This is very important, revenue per share, because some companies do capital raisings and some companies increase their shares on issue by double or quadruple over a 10-year period. So even though the revenue might be climbing, the revenue share might be dropping. But for Clinuvel, the revenue per share compound annual growth rate over the past 10 years is at 50.8%. But I think 10 years ago, this company had no revenue. But over the past 5 years, it's been growing at 27.6%. Over the last 3 years, 26.5%. And in the last year, in the trailing 12 months, revenue has grown at 24.3%. So still significantly above 20%. And the number I typically look for here is 10% per year. Now, that doesn't necessarily mean I need to see the revenue for a company increase in 10% in one particular year. There could be some companies I'm interested in who might only see the revenue grow 1% this year or even negative. That means nothing. Now, if they continue to grow at those rates in the next few years, then it would become a problem. But revenue growth can be quite lumpy. For Clinuvel, it has been lumpy over the past 5 to 10 years. Return on equity at 21, which is a nice high number. That's a sort of return on equity you want to see. P/E ratio at 44. It has been as low as about 35 when the share price was down at its lowest, about $15. And the price to operating cash flow is 26.6. I'm being a little bit conservative with that particular valuation metric simply because I'm using the markup or the price, not the enterprise value. Typically, I probably would prefer to use enterprise value here because that's a truer indication of the value because you're including the debt and the cash. You have to include the debt and the cash when you are valuing a company. But I just want to be a little bit conservative, and a price to operating cash flow of 26.6 is fairly, I won't say it's too low or too high for a company like Clinuvel. It's probably about right. So at this point in time, I wouldn't call Clinuvel overvalued or undervalued right now. I think it's fairly priced. And I think just the way the market reacted when they released the half year results is sort of an indication that the market's not quite sure if Clinuvel is overvalued or undervalued right now. Now let's have a look at a couple of charts. I always like to look at charts. And for Clinuvel, we're looking at the daily chart here, which goes back to September 2021. The reason I wanted to go that far back is there was a lot of hype around this company in 2021. Share price rose to about $45, and that was sort of a circumstance or a situation when Clinuvel was overvalued. And then the market got a little bit scared because of possible competition. And there were a few news stories about other companies. I think one of them was Mitsubishi Tanabe out of Japan had a treatment, a sort of a pill for EPP, sort of a competitor for SNES. And that's why the share price fell off a cliff during or the latter period of 2021 and the first 6 or 7 months of 2022. Share price actually fell from $45 to a low of $13. I can't believe it was as low as $13. So that's a massive decrease in the share price of a company that is still growing, that has only one risk, and that's around the competition. But I think all those who were fearful and just had to sell out the shares for Clinuvel sold out between November 2021 and June, July of 2022. And right now, most of those shareholders are out. And probably the majority of those shareholders who sold near the bottom at $13 just can't believe the share price has actually doubled since then. But the share price of Clinuvel has moved into a nice uptrend. We did see the share price take a little bit of a hit when the company released their quarter results in January. But again, we should be expecting receipts to be lower for the December quarter. So again, I think the market, and I think a lot of participants in the market just don't understand the Clinuvel story. And I know this because I went to Hot Copper and I read a few of the posts in Hot Copper, and even posters in Hot Copper don't quite understand this company. So this wasn't around this specific quarter. This was maybe a year ago when there was a decrease in receipts from, say, the September quarter to December quarter. There was a post to say, well, the growth in this company has come to an end. Receipts are falling, blah, blah, blah. So again, there's going to be a lot of people even people who have invested in Clinuvel, who don't quite understand there's a lot of seasonality when it comes to revenue and cash receipts for this company. I think that's what happened when the company released their quarter results back in January. And a really interesting trading when the company released the half-year results. And we'll look at that interesting trading in the next slide, because instead of looking at the weekly or even the monthly chart, I'm going to show you the 1 minute chart. And the 1 minute chart shows you the whole trading for just one particular day. So let's have a look at that 1 minute chart to see the interesting trading, the volatility in the trading of Clinuvel the day they released the half-year results. This is the 1 minute trading. A lot of trading happening with Clinuvel, particularly in the first hour and a half. So I've separated the 23rd, which is right at the start of this particular chart, with the 24th. So that horizontal line, or vertical line, sorry, that is when trading began. And in the first 15 minutes of trading, the share price for Clinuvel went from about $24 up to $25.70. So initially, the market absolutely loved the half-year results, and understandably, because profit was up 94% or something like that, revenue up 19%, the market loved it. But then between 9:15 and around about 10, we'll say 10:20, 10:25, so about an hour, some selling came in. It could have been just one fund manager selling, because that some fund managers don't care about the share price they sell. They just dump on market. And this is just me hypothesizing, and possibly them dumping on market sent the share price down from $25.70 all the way down to $22.20. That's a 13% correction in the share price in about 1 hour of trading. And then the selling suddenly stopped. And that's what makes me think it was just one fund manager just selling for some reason. Maybe they were buying the rumor, which is just buying before they release the half-year results, and then selling upon the release of the half-year results. And as soon as they stopped selling, we saw a nice rebound in the share price. Not quite as nice as share price didn't quite recover back up to the previous day low, but it was a nice little recovery in the share price between about 10:20 and 10:45. And then the rest of the day, the share price went sideways on very little volume. So interesting reaction from the market. And this reaction could have been just one fund manager, or maybe it could have been two. But it's really interesting that all the selling happened in a 1 hour period. window, and then the selling suddenly stopped at about 10:20 a.m. That's all I have for this update to Clinuvel, for Clinuvel, with Clinuvel. Not an expert in English, so excuse my bad usage of words. I speak it, but I don't understand English all that well. Anyway, if you have any thoughts, any questions about Clinuvel, if you think I'm a complete man for owning Clinuvel or having Clinuvel in my portfolio, I'd love to hear your opinion. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.